She inherited $1 million in 1865. Wall Street mocked her worn black dresses and called her the witch. By 1916, she turned it into $100 million using the same strategy Warren Buffett would make famous 50 years later. During the Panic of 1907, she loaned money to New York City when banks were collapsing. New Bedford, Massachusetts, 1834. Henrietta Hetty Howland Robinson was born into a wealthy Quaker family. Her father and grandfather were successful whalers and businessmen. From childhood, Hetty was unusual. While other girls learned embroidery and piano, Hetty read financial newspapers to her grandfather and studied account books. By age 13, she was managing accounts for her father's business. Her family's Quaker values emphasized frugality, thrift, and distrust of ostentation. These principles shaped Hetty's entire approach to money. In 1865, when Hetty was 30, her father died, leaving her approximately $1 million, about $20 million today. Shortly after, her aunt also died, leaving additional inheritance after years of legal disputes. With approximately $1 to $2 million in total inheritance, Hetty faced a choice: live comfortably on the interest, marry well, and enjoy Gilded Age society, or invest aggressively and build wealth. Hetty chose the latter. In 1867, she married Edward Henry Green, a wealthy merchant. Crucially, she insisted on a prenuptial agreement keeping their finances separate, extremely unusual for the era, and a decision that would prove wise when Edward's business later failed. Hetty moved to New York and began investing seriously in the financial markets. Her strategy was simple, but required iron discipline. Hold cash during booms. When markets were high and speculation was rampant, Hetty held cash and bonds. Buy during panics. When markets crashed and others were desperate to sell, Hetty bought assets at fire sale prices. Avoid debt. She never borrowed or speculated on margin. Invest in undervalued assets: real estate, railroads, government bonds, municipal bonds. Be patient. She'd hold investments for years or decades if necessary. This contrarian approach required patience and courage. During bull markets, she looked foolish holding cash while others got rich. During crashes, she had to buy when everyone else was panicking. But the strategy worked brilliantly. Hetty became famous and infamous for her extreme frugality, despite growing wealth. She wore the same worn black dress for years. She carried lunch in a paper bag. She lived in cheap boarding houses rather than buying mansions. She reportedly heated food on office radiators to avoid restaurant bills. The press had a field day. They portrayed her as a miser, a witch, a woman who'd forgotten how to be feminine. Cartoons depicted her as ugly and mean-spirited. She was called the Witch of Wall Street. But Hetty didn't care about public opinion. She cared about returns. During the Panic of 1907, a severe financial crisis that nearly collapsed the U.S. banking system, Hetty had cash, lots of it. She'd seen the overheated market and had been holding liquid assets. She loaned money to the city of New York when it couldn't make payroll. She bought properties and securities at distressed prices. She emerged from the panic wealthier than before, while many titans of Wall Street were ruined. Hetty's wealth grew steadily. By the 1990s, she was one of the richest women in America. By 1900, she was one of the richest people in America, period. She invested heavily in real estate, particularly in Chicago and San Francisco. She bought railroad bonds and stocks. She loaned money at good rates. She never made spectacular gambles, but she made consistent, disciplined decisions that compounded over decades. Hetty also faced significant sexism. Banks initially refused to deal with her directly. She had to conduct business through